Hello, hello, hello. Welcome one, welcome all to FX Street webinars. My name is Steve Patterson. No, this is not me. But, hey, Luca. Hello, everyone. Just a heads up right now, guys. I have a couple of trades working right now. So I'm going to be kind of, I almost didn't make it, Boyke. I have, as you guys know, I don't make a living from coaching or teaching. I'm a trader, so I have to give my attention to my trades first and foremost. And I apologize if that's an inconvenience to some of you here, but it's just the way that it has to be. So I do my best. And so let's move right along here with the topic of today's trades. The Euro-US dollar characteristics. Now, I get a lot of people contact me, and a lot of people usually say to me, should I, well, not just a lot of people, but there's an argument out there, okay? The argument out there is, should you concentrate on one thing, or should you diversify into a lot of different things, okay? And I think the answer is both, all right? I think a lot of people, when they get into trading, they get a little lost. And let me just get the disclaimer out of the way, just so I don't get sued. Yada, 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 blah, 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 blah. Don't sue me. Anything I tell you is not real. Consult a real professional who's licensed. Don't talk to somebody that actually makes money. Talk to somebody that's licensed. You wouldn't want to do that, right? Anyway, I get a lot of questions about people saying to me things like, should I concentrate on one pair, Steve? Should I concentrate on multiple pairs? What should I do? Well, like I said, I think the answer is twofold. I got a trade working here, guys. Like I said, I have to watch this thing here. I'm waiting for the yen. I'm short on the yen here. I was waiting for it to get down to 9,600 here, so I might have to pop up a few things here and come in and out. So what should we do? Should we concentrate on one pair, or should we concentrate on all the pairs? Well, I think, like I said, the answer is twofold. By the way, for those who don't know me, 27 years of experience, currently a retail trader, running managed accounts, traded managed accounts for 10 years. I'll talk about this stuff later on. Okay. I love this picture, by the way. The Euro-US dollar characteristic. Yes, I know. How to become intimate with your currency pair. I figured some of the guys in the room would like that. And some of the ladies in the room, if you look like that, please Skype me personally. Just teasing. I have to have fun today. Yeah, that's the sexy currency. I don't make my slides up. My partner makes that up. Anyway, so should you become intimate with one currency pair, or should you trade them all? Okay, that's a very interesting question, right? And I think maybe two, maybe three. I think the French have a term for that. But anyways, enough with the fun. So let's talk about how to become intimate with your currency pair. And I want to challenge everybody to do this. I want to challenge everybody to, for 1 month or for 2 months or 3 months, a lot of the stuff I asked you guys to do is hard, right? I know, but there's no easy way around it. for any of you that watch any of my videos, you'll understand that you know, I don't gloss over how difficult it is to become a trader, and you know, I really like to stress that. So I like to give exercises too, and for those of you that watch some of my previous videos, one of my exercises, this exercise is going to be watch your currency pair for 30 days. So let's go and take a look at our currency pair. I got a trade working here on the yen, guys, so I may have to close this here, okay? Yeah. All right, so as soon as the yen gets down to 9,600, I have to close the trade. All right, so I hate when I have trades on and I do these webinars because I get so distracted. You know, I can't stand it. Okay. Anyway, here we go. So I got to watch the yen here.
Order filled.
Ah, beautiful, beautiful. Hold on, guys.
Order filled.
All right. Okay, good. I probably should have held that a little bit longer. Damn it. There she goes. Probably going to grab this liquidity down here. Probably gonna run to this liquidity level down here. Anyways, I got out, which is good. Just have to check one more thing, okay? Sorry, guys. Oh, nice. That one's working nicely too. Okay. All right. Okay, so let's now I can pay attention to things here. I'm not sure if the euro is going to make it down to this liquidity low, or the yen is going to make it down to this liquidity low here. Probably will. Yeah, Mike, I'm a real trader. Okay, I'm going to just, you know what? Probably going to make this level down here. Look at that. Look at that. Probably could have picked up an extra $400 or $500 here on this trade. Oh well. Probably going to go. Here we go. Come on. Grab it. Go, 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 go. Yeah, I could have picked up an extra $500 or $600 on that trade. Maybe not. I don't know. We'll see. Okay. So, back to the topic of the seminar. Okay, man, FX Street, you guys better like me, boy. The things I give up for you guys. No, I think my exit here at 96 was good. I'm looking at this whole area kind of being a congestion area, and I know it's probably going to bounce around somewhere between here and here, 12 and 90. Yeah, I think so. Characteristics of the euro-US dollar. All right. So, what do I mean by characteristics? All right. Well, I think this is best viewed on a larger time frame. So I'm going to pop up some charts here just to give you an idea of what I'm talking about. Let's look at some daily charts here. All right. So here's a daily chart of the euro. So when I look at this chart, what am I seeing? All right. So one of the things that sticks out in my mind immediately is, how are moves happening, right? How are moves happening? All right. Now you'll see that different. No sound. Can other people hear me? Yeah. All right. Now different pairs move in different ways. Okay. So when I'm looking at this euro US dollar, what I'm kind of looking at is how it's recently been moving. All right. And so this gets a little tricky because what's considered recently? Right? What's considered recently? All right. Well, recently would be, to my mind, the last. It's contextual. Okay, it's another hard question that traders have to face, because sometimes one thing works in one situation, sometimes one thing works in another situation. So contextually, I'm looking at the characteristics since January of this year. And since January of this year, let's take a look at how the moves have been happening. We've had a large down move, followed by a large up move, followed by a large down move, followed by a large down move. Look at that. Bam. So mad. I could have grabbed another $600 on that trade. Oh well. See, I didn't see it, right? When I was watching it, my short was from here. And my target on the trade was just 9,600. Right? My short was from this level here. I was only looking to grab around 12, 14 pips on it. And I didn't see the trade, right? I didn't see the liquidity area down here. But as soon as I saw this black candle coming in here, I knew right away that we were grabbing this liquidity. But, I'm in a webinar right now, and I can't really talk. I can't really do two things at once. I got to do one thing or another. So in any event, as long as you guys get value from it, that's all that matters. Anyway, I knew it was going to grab that. Damn it! Shoot. Okay. I don't think so. I'm done for the day, Luca. I done for the day. So let's take a look here. So now we have big down move, stall, small up move, large up move, tries to go higher, gets rejected. Big down move, stall, up move, down move, tries to go higher, down move, stall, up move, down move, up move, down move, strong down move, and now strong up move. Okay, so yeah, I know. I think we're going to go to 9,500 on this Japanese yen. No, I probably should have held a runner though. But anyways, have to take it one day at a time. So the point I'm trying to make here is that currently the environment for the euro is a very strong downward bias. Okay. But it's intermittently scattered with these strong up moves. Okay? So, as a trader, what we're trying to do is we're trying to exploit everything that's happening, right? And so, looking at the situation and saying to yourself, okay, in the current environment, at least since January, now this can change, okay, and it probably will, right? More than likely, probably somewhere in this area here, it looks to me like we're gonna mess around in here for a while. But in any event, the characteristic of the euro at this particular time, if we grab this liquidity down here, you guys are going to hear me say some curse words. I can't believe we're probably going to do it now. Yeah. We're probably going to grab that liquidity. Maybe not. Yep, we are. Damn it! Ugh. Sorry. Have to see how it behaves around here. This might just be a cascade of stops here. I'm not sure yet. FX Street, you owe me another $1,000. Okay, so in any event, I'm just joking, Maud. You know I love you. Or Vicky. I don't know. This is looking really, really, really tasty right now. There we go. Okay, so that was just a cascade. We should be okay now. Yeah. Okay, now I don't feel so bad. Okay. All right, so how do we exploit the situation? Well, very simple. Yeah. Yeah. Well, you know, they give me these spots, and I just do my best. So how do we exploit this situation? Well, the answer is depends on your time frame, right? I knew this was just a cascade. My feeling was that we weren't going to go too far past 96. You know, this liquidity was one area, but I just couldn't see us getting all the way down to 61. Not today. Right? So let's use this as an example. Let's use this as a good example, because let's take a look at a longer time frame on the Japanese yen. All right. Okay, so this is a very obvious situation. What are the characteristics of the yen right now? Okay. What are the characteristics of the yen right now? Well, the yen has been grind, small retrace, grind, bigger retrace, grind, retrace, grind, retrace, grind, congestion, big massive retrace, and then look at all this, just ballistic move up here. Okay, now to me, this is the end of the road. Okay? Because if you're reading market flow, okay, this is telling me that the party's over, at least for now. Okay? And the reason is that the characteristics have changed. Okay? And this is why I'm doing this whole webinar, is to teach you that markets have characteristics. They have behaviors, right? I always like to use the analogy of markets are like women, right? And relationships for the females in the room. Markets are like relationships, but for the guys in the room, you know, markets are like women, right? They're alive. They change. They're constantly in flux, right? And that's one of the things that I think that a lot of people don't understand. A lot of people don't understand, and they keep trying to put markets into boxes, and they don't understand this is a living, breathing thing. And the reason it's living and breathing is because there's living and breathing people behind it, right? And those living and breathing people are developing the characteristic that this market will have. Okay, so here's an example where with the yen we had this very strong move. You know, we're up from the lows last October. You know, it was a massive move. So when I see this behavior here change, okay, it gives me a clue how I should exploit that situation. All right, and that's what I'm trying to do all the time. I'm trying to look at the characteristic of each and every pair, and then try to figure out, okay, well, now how do I exploit this current situation? Okay, so the way to exploit the Japanese yen for pretty much all of January, and we didn't know that when we were coming into January. It's pretty easy right now to see it in hindsight, but you know, you have to kind of use your imagination, right? And no, I don't use anything like that. Okay. And here's a good example for those of you that follow me, and you know I'm not a believer in indicators, and you know I'm not a believer in things like that. But the reason I'm not is because of the exact thing I'm talking about. Okay? You don't need Elliott wave. Elliott was a genius. You know, Gann was a genius. Bollinger's a genius. You know, Tom DeMark is a genius. There's a lot of really smart people out there that came up with ways to view the market, and you know, they invented all this stuff, and you know, all these things out there. But to me, you just look at a chart. I mean, like, just look at price and order flow, if you want to call it that term, a phrase. I will, Boyke, to term a phrase. So the reason I see this is because it really wasn't about, by the way, Boyke, today's not just about the characteristics of the euro, US dollar. It's really the characteristics of all pairs. I wanted to use the US dollar as an example. Okay, so in any event, the characteristics of this order flow, if you will, are dramatically different than the characteristics of this order flow. And so what you're trying to do is look at this. Ah, man. The yen's going to come down 95.50. If we close weak today, anyway, the characteristics of this price behavior are different than the characteristics of this price behavior. So again, I want to bring back, now a lot of you are going to say to me, Steve, this is really esoterical stuff, right? How do we use it in trading? And the answer is you don't. You have to watch and watch and watch and watch and watch and watch and watch. What a lot of people say, you know, how do you become a professional trader? I say put the screen time in, right? Put the screen time in, because that's the only way you're going to learn how to have a relationship with your pair, because that's exactly what it is. Okay? And again, I go back to the analogy of a relationship, and I use, you know, a woman or a man or whatever, because it's constantly changing. It's constantly changing. All right. So, yeah, you know what? Listen. Okay, so this kind of brings up the bigger picture, right? 10,000 hours. Well, you know, I don't think so. I think that if you know what to look for and you understand the right context of what trading really is, I think you can become a fairly decent trader in a year, right? If you know what to look for. But if you're looking at all kinds of stuff that, in my opinion, is nonsense, not nonsense, just not applicable to the situation, then I think you're going to get lost in the minutia, right? And you're going to get lost in the detail, right? Okay. So let me just give you a bigger context of how to think about things. When you're looking at a characteristic, you want to say, what is it doing right now? If this was my girlfriend right now, okay, if I was dating the euro, she's in a bad mood right now. Okay? She has good moods, and she goes in a bad mood, and she gets in a good mood, and she goes in a bad mood, and she's in a good mood, and she's in a really bad mood, she's in a good mood, she's in a bad mood, she's in a good mood. She's pretty psychotic right now. Okay? But she's been more in a bad mood than she has been in a good mood, right? So, yeah. So I want to be in a situation, where I'm exploiting her bad moods more than I'm counting on her good mood. Sorry, guys. I try to keep things humorous. I'm just being honest with you, right? I can't lie to you guys. I can't say to you guys, okay, this is the way to do something when I do it. This is how my warped mind looks at things, okay? This is how I view things. I view things from that perspective because I learned a long time ago that you have to view the markets as being alive. Like, I remember when I was first into trading, somebody saying, well, the markets are alive. They're a living, breathing thing, and yada, yada, yada. Well, I didn't understand that, right? I didn't understand what that actually meant. Well, that actually meant they're actually alive. That meant there are people behind it, right? So the people, or my girlfriends, are in this situation right now. So I want to be exploiting that situation. So I want to be looking at shorting the euro as much as I possibly can. Okay? Now, I use other ways of doing it, but I use things like sentiment as well too. But right now, the characteristics of the euro at this particular time and place and space that we're in are that she's in a bad mood, and I want to find out what kind of bad mood she's in. Okay? Okay. What kind of bad mood is she in? Because if I know that this is a good mood, okay? She's in a great mood, everything's going great, nothing's going wrong, everything's going great, nothing's going wrong, everything's going great, nothing's going wrong, everything's going great. All of a sudden, some things start to change. Okay? She has a little bit of a hissy fit here. Okay? And then all of a sudden she goes, nope, I'm in a fantastic mood, and now this big move from here to here is telling me, okay, it is now time for something big to happen. Okay? The sentiment, the mood has changed and is now telling me that something big is going to happen. Maybe. And the key word, I'm going to repeat that again, maybe. Okay? But it is now putting me in a situation where I can now possibly exploit it. That's all I'm trying to figure out. I'm just trying to figure out what kind of sentiment or mood or characteristics that the current pair is behaving in right now, so that I can figure out a way to make money off of it. Okay? For those of you that are single men or dating, if you're dating this girl, and for those of you guys who will understand this, you want to get lucky. Right? We want to have fun. And we want to get what we want to get, which is money in this case, okay? If this was my girlfriend, then I'm not going to be happy. The only time I'm going to get a couple of kisses on these days. On these days, I'm not going to get kissed. But that's a nice thing about the market, right? You can get kissed either way. So we can make money on both of those situations. All right. So, how do we exploit this situation? Okay, so what I now know is that the way that the characteristics of the euro have been happening, that if for some reason I get a big dramatic up move, what do I do? If I get a big up move right now, what do I do? Exactly. So should I be selling in in certain areas, no. I can be selling overall, okay? But if I want to exploit the situation, I would know that if for some reason I get a big, strong up move right now, let's say a move up into this area, which is highly likely, okay, 3171 area. If for some reason we were to get a strong move up into this area, we would want to sell that, right? So anything in between, we want to be very careful of, because we don't want to be taking too many shots during the day, because of the characteristic that it's been having, where it's been putting in these big, strong days here. Okay, we want to not take too many shots intraday, and if we do take some shots intraday, we want to maybe just keep them down to maybe half lot sizes, right? Because we don't want to be getting our butt handed to us like these big white candles are. If you were shorting on this white candle, you would have got your butt handed to you all day long, and your butt handed to you all day long here, okay? So it's not that you shouldn't be buying. You should be buying, right? But you should be looking to buy as well too. And looks like most of the buying has had some legs to it. Okay, meaning that most of the buying has gone for 20, 30 pips, no problem. So you can be buying the euro right now too, but you can be shorting it. But I really want to be on the other side of the euro right now, where I'm shorting it more than I'm buying it, because the down moves are far more dramatic. Okay, so this is how I would do it on a larger time frame, where I would build a context and say, okay, on my larger time frame, if the euro were to get back up into, the 361 area, I want to be very aggressive on any shorting that's going on. If the euro if I see a strong trend day up on the euro, I want to ride that trend. Okay. So now let's see if we can go down to a 5-minute characteristic. Okay. So, what an ugly chart, eh? But it's typical. Okay, it's typical with the behavior that the euro has been experiencing. All right? I don't use any indicators at all, really, Gregorian. I shouldn't say that. Sometimes I throw up indicators for fun. For example, I'll show you an indicator that I used today, which helped me make a trade today. A Canadian dollar. I use a Canadian dollar today. Okay, so I was watching the Canadian dollar today. I had a short bias on it. And today I threw up some Bollinger Bands. It's a true story. Okay, I threw up some Bollinger Bands. Indicators. I threw up just some. I threw up some Bollinger Bands on it here. It's a true story. I did this today. Because people think that I'm anti-indicator. Well, I'm not. Okay. I looked at some Bollinger Bands today. I was watching the Canadian dollar. And I saw this little area up here. I wanted to get short on it, and I saw this move here, and I threw up some Bollinger Bands to see if it could tell me anything here. All right, and so when I took this short here on the Canadian dollar, right, the Bollinger Bands helped me make that decision. Okay, and yeah, so I'll throw up different things for different situations, right? If I need an oscillator, I'll throw up an oscillator. If I need something that tells me the trend, I'll throw up something that tells me the trend. But overall, my analysis, and I'm going to talk about the Canadian dollar right now because it's a very good example. My analysis is be adaptable. Okay, I think I repeated it in my last webinar. I'll say it again. The strong don't survive. The most adaptable survive. If the strongest survived, the dinosaurs would still be here. Okay, cockroaches have been around longer than anything else in this world because they are the most adaptable. So, call yourself a cockroach. All right, let's talk about the Canadian dollar because it's another really good example of how to look at characteristics. Okay, the Canadian dollar for the longest time is just really ugly. All right, let me explain what I mean by that. Cockroaches? I don't know. They you can spray Raid and crap on them, and they keep coming back, right? Okay, so let's look at the Canadian dollar. Let's look at some characteristics. Okay, let's look at how to exploit characteristics. Okay, this is your girlfriend again. Okay, bad mood, bad mood, bad mood. I'm in a good mood. Bad mood, bad mood, bad mood. I'm in a really good mood. Bad mood, bad mood, bad mood. I'm in a good mood. Bad mood, bad mood, bad mood. I'm in a good mood. Bad mood, bad mood, bad mood. I'm in a good mood. Bad mood, bad mood, bad mood. Bad mood, bad mood, bad mood, bad mood. Okay, I'm in a good mood. Good mood, good mood. Bad mood, good mood, bad good mood. Okay, now you also it helps if you look left. Okay, because you have to know where areas are, okay? It's also important to know where key areas of support and resistance are, okay? Which is I cover in my liquidity trading as well too. So you can't just do what I'm saying and take it in the bubble. You have to put it into the context as well. Black cat, yeah, mosquitoes are adaptable too. I think they've been around longer than cockroaches. So in any event, you know, how do we exploit this situation, right? So the Canadian dollar is usually very, very messy. It doesn't have a lot of follow through. Okay? It usually chops around a lot, and it's really significant at key areas. Okay? So if I'm trading the Canadian dollar for the longest time since last September, what I'm really looking at are key big areas on the Canadian dollar because it seems to respect certain price levels more, and then it gets all screwy. Like it doesn't have any follow-through. So, for example, if I was long the Canadian dollar, okay, from this level right here, what would be going through my mind if I took this trade, even before I took this trade, what would be going through my mind was, okay, I'm deciding to take a long here. Okay, now what do I know about the Canadian dollar? Well, I know it's been in a really, really bad mood for a long time. So taking this long here is semi-suicide. Okay? Thanks, Boyke, but I doubt it. We won't get into that. Okay? It's semi-suicide but I also know the Canadian dollar loves to do this type of stuff. It loves to do this type of behavior. It loves to go all over the place. The characteristics of the Canadian dollar are very, very jumpy. So this would be a trade that is a difficult trade, but not one that I would say absolutely no to, because I know the characteristics of this thing is that it doesn't like to do one thing for too much for very long. Okay? That's its characteristics. It just doesn't do it. It's schizophrenic. Okay? And so, knowing that it's schizophrenic, then maybe taking along here isn't so bad. Okay, so you get long the Canadian dollar, but I would also be saying to myself, you know what? Being that it's schizophrenic, we could very easily go down and take this out. So if I'm looking at a trade here on the Canadian dollar of risking 100 pips, I probably want to use a 150 pip stop on that. Okay, because it's schizophrenic. So I would adjust my risk model to fit into a 150 pip stop. Okay? And so all of a sudden, good mood, good mood, good mood, good mood, right? Great, 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 great. Okay, not so great, not so great. Oh, good mood, right up until this level here. Okay? Now I told you, Canadian dollar has this funky thing with various important levels, okay? So I would see the rejection there, and I would obviously I'd get a little bit worried at that point in time, but I'd also realize it's a Canadian dollar, and anything can happen with it. Okay, it can do this type of wacky behavior, it can do this type of wacky behavior, it can do this type of wacky behavior. It's in a very, at least currently, it's in a very wacky type of mood. So I wouldn't panic too much. And you see here, we start getting this type of behavior here. And I would look and see where my liquidity levels were at that particular point in time. We got liquidity here, by the way, which is probably where I would have gotten out of that trade. But the point I'm trying to make is that you're trying to constantly look for the characteristic of whatever pair you're trying to exploit. Okay? So again, looking at the Canadian dollar, we had this big move up here. And so now looking at the Canadian dollar, I would now say to myself, okay, the Canadian dollar doesn't like to do one thing for very long at a time. And we've had this significant move here off of these lows, and it looks like now the price behavior is starting to change. I'm starting to see more black candles come in here than I'm seeing white candles here. So there's some changes going on. So that's why today I was able to exploit the Canadian dollar on the short side of my trade. Okay? Because when I saw the Canadian dollar getting up into a lofty price area, it was pink on my daily bias, and then I saw price could not get through the high, failed again. This was a pretty much no-brainer. Okay? So I have exact ways that I do this, and I hope you guys don't understand. I teach those exact ways to my students and to my people that they train. I have exact ways that I do it, but I wanted to give you guys kind of like a broader outline on just a new way for you to view the markets. Okay, a new way for you to view the markets. So hopefully you guys kind of got the idea that I'm trying to put across, right? Any questions? Almost near the end of the webinar. No questions? So, just to wrap up some things then, as far as the euro is concerned, ouch. You can do this, Boyke. Have you considered trading with the trend to eliminate moods? Yeah, well, that kind of answers my first. That's kind of people always say to me. Okay, let me give you. I think that's okay. But the problem is you still have to understand a characteristic to know when a trend is going to change, right? So I think ultimately the simple answer is that you should trade with the trend, yes, but you should have an understanding of price movement because you need to be able to know when that trend is no longer a trend, right? You need to be able to understand different market environments. You understand different characteristics so that you can exploit everything. I mean, there are going to be times in your career when volatility is high and, you can exploit that. There are going to be times when volatility is low and you need to exploit that. I've lasted a very long time in this industry because I have been adaptable. So I think just with trading with a trend, I think you put yourself in a box. And what happens when there's no trends? Well, then the argument is, well, there's always a trend. Sure, there's always a trend. Is this a trend? Yeah. This is a trend. But it's a very, very different trend than there's all kinds of different trends, right? Like there's several types of trends, all right? So once again, I think if you look for a trend by using moving averages, if you look for a trend by using tools, I think you miss the big picture again, which is to look for the characteristics of the girl that you're dating, and then, for me, I trade the 6 majors because there's 6 girls I can date any day. And so I'm going to always date the girl that I think I'm going to have the most fun with on that day. Clean fun. Don't let your minds go perverted. Clean fun. By fun, I mean making money. Okay? So that's what I'm trying to do. Okay? The Aussie dollar, I'll touch on the Aussie dollar real quickly. I don't have much time here. The Aussie dollar, I was avoiding the Aussie dollar like crazy for the longest time because it just got stupid, right? I don't like the Aussie dollar at all. The Aussie dollar, again, look, this is an example of what I'm talking about. This is stupid, right? I mean, this is just stupid. I mean, you've got white candle, black candle, white candle, black, white, black, black. It's, once again, the Aussie's a lot like the Canadian dollar, okay? Blicky, you're one of my favorite people in my seminars. Anyway, that's why guys have best friends, right? All right, so the Aussie dollar is, again, stupid. The Aussie dollar just moves. The Aussie dollar just moves in crazy kind of stupid moves, right? So the Aussie dollar is really hard to exploit, and I actually don't even day trade the Aussie dollar very rarely, right? Because it's so stupid. It's kind of similar to the Canadian dollar. You kind of really want to respect and just wait for it to get to big levels, because when it gets to big levels, it seems to do things. Okay? If you just try to look at the characteristics of the chart, and somebody asked me 5 minutes, somebody asked me about 5 minutes. Yes, I trade from all charts, Dan. I trade from 5 minutes, hour charts, daily charts. I trade whatever in play. Okay? Okay, so here's an example. If I was a single guy and I saw that this girl over here, the Aussie dollar, came down and was at this key level, and all of a sudden a strong buying came in, like, I know the Aussie dollar is a good date at this level. Okay, I know that there's probably going to be some follow-through of this good mood that she just got in, because every time she gets bound to this level, or every time she got at this level before, something has happened. When it's got to this level, something has happened, right? Again, people try to put it in boxes. People try to say, oh, support and resistance. People try to say all kinds of stuff like that. And that's fine. It works. But what I want to challenge you to do is to view it from a more organic perspective, okay? View it from more of a holistic person perspective, all right? I'm a street kid. I came from the streets. I got to where I was by being street smart and surviving. And so for me to put it into a mathematical equation ain't going to work. Okay, but we all have people skills, right? So to me, the markets are alive. Look at it from a holistic perspective, and you'll do yourself a lot of good. Look at the characteristics of every pair. Okay? Bay Street, Mike. Well, actually, I grew up in kind of like the projects of Toronto, if you will. But anyways. Charlie, a lot. It depends on the day quite a bit, Charlie. Some days I'll take 15 trades, some days I'll take 5. And of course I swing trade as well too. So I can't talk anymore, people. Please join me. Oh, one other thing. I am launching a room. www.forexliquiditytrading.com. I am launching a room soon. You can go there and sign up. I offer a free trial period. I'm going to try it out and see how it goes. I think we're going to charge $275 a month, and then I'm going to do some private coaching in there. Don't expect much for $275 a month except for some trade calls. We're going to see how it works out. If I like it, I'll keep doing it. If not, then I'm just going to pocket it, kind of throw it in right now. But we'll give it a try. It's not running yet. The live room probably won't be running till Monday or Tuesday. I haven't decided yet, but you can go and check it out. And if you guys like it, great. If not, meet me here next week. In a couple more weeks, I'm back for another live trading session. Let me just check quickly. Hopefully this trade is doing well. There we go. I'm up $1,400 on this trade right here. I made $1,200, $1,500 on this trade right here. Made $1,000 on my last trade. So as you guys can see, I'm a real trader, not a wannabe. Thank you, people. Wish you all the best, and hopefully you learned something.